Hello and welcome to another episode of Tasha's Takes here in Vegas. And I am delighted to be talking with a friend of Cable, Jay Leal, the CIO at Vantage Bank. Hey, Jay.
Hi, hello. How is it going?
Good. Thank you for joining me. We're going to be talking about stablecoins and tokenized deposits, which is something that Vantage Bank has really been getting into recently. And I want to start off with the basics. Talk to us a little bit about what are stablecoins, what are tokenized deposits, what are the differences between the two?
Well, stablecoins are tokenized. They're digital tokens used for payments. They are typically backed one to one with reserves. They could be cash or other treasuries. Deposit tokens, on the other hand, those are actual digital deposits that live inside the banking system. So those are on the bank's ledger. They are FDIC insured. And so those are the big differences between the two.
And so with a tokenized deposit, if I was banking with Vantage, I have a checking account with you and I put $100 into that checking account. You would represent that $100 with $100 worth of tokenized deposits, and you could then move those tokenized deposits, settle at the end of the day, and sort of balance out my actual USD. Is that how it works?
So no, actually, the funds are your actual dollars. It's your actual deposit. So when you deposit $100 into a tokenized deposit account, your money becomes it's recorded on a distributed ledger. Okay. And so it becomes just a deposit token that can be moved and programmed in any kind of way. There isn't a settlement or there isn't a separate ledger where there's a reconciliation to convert it. It becomes in itself a token based off the type of account and distributed ledger.
Interesting. So it has its own ledger instead of being on the sort of traditional US dollar ledger that a bank would hold.
Right.
It's on this tokenized deposit ledger.
Absolutely.
And you're still holding that $100 and that's FDIC insured.
Exactly right. Exactly right.
Got it. And so as a consumer, do I need to be saying, hey, Vantage Bank, I want this as tokenized deposits?
Well, so today, what we would do is, yes, we would set up a tokenized deposit account for you so that you can transact and move that money. But in the future, I can see where all deposits at community banks, at banks across the country, will inherently have this tokenized characteristic, because who wouldn't want to be able to have their deposits, their money, be able to be programmed and moved really 24/7 to make payments.
So when you talk about it like that, it occurs to me that actually really maybe a good way to think about this is just that tokenized deposits are your deposits on a much more modern ledger. So instead of having to settle every evening via a CSV with your core, it's just a real-time ledger.
Exactly right. And so that's the key distinction. So deposit tokens live within the current banking regulations, within your current frameworks that you have inside your bank. And so there isn't an additional responsibility or requirements on the accounting side, on the ledger side, on compliance. This all lives within that same regulatory framework and the same controls that you have in today.
Very interesting. So what are the advantages of stable coins then? Why would banks be interested in creating their own stable coin instead of going down the tokenized deposit route?
Well, so stable coins live outside of the banking world, outside of the banking institutions. So those are offered by non-banks, fintechs, technology companies. Deposit tokens, on the other hand, will inherently, they're only by regulated banks that carry that FDIC insurance. So those are the two distinctions. So banks would want to participate in this kind of system because those deposits are your deposits. They're the bank's deposits, and they still live inside your organization. If banks don't participate in this, then the alternative is their customers are going to seek out stable coins and pull those funds out of those banks and onto these fintech companies.
Got it. Okay, that's super clear. So if we think at a macro level, what are the like pros and cons to tokenized deposits, both for you as a bank, but also for consumers?
Well, for consumers, the big benefit is 24/7 instant payments. So these are payments that can be transacted within seconds of each other. And so you're able to move these funds much more efficiently, yes, but also at a much lower cost. So these transaction costs are lower. Stablecoins and deposit tokens also have the ability to be moved globally. So again, being able to move funds faster, quicker at a lower cost. Deposit tokens carry the additional tokenized deposits carry the additional benefit of still carrying that FDIC insurance, which, when you talk about stable coins, there's the risk that you have there. One of the cons that you have there is the fact that you're relying on the trust that you have in one of these companies. So if a stable coin provider mismanages their reserves or becomes insolvent, who carries that risk? The consumer carries that risk, because if one of these companies goes away, you lose your money. Deposit tokens, on the other hand, carry FDIC insurance, and you have the trust that, just like any kind of other banking system, it's regulated, and you've got oversight by regulators across the country.
Yeah. And for the banks themselves, why would you put all of this investment into tokenized deposits? What is the advantage for you?
Obviously, the deposits stay inside the bank. And so I think...
So almost future-proofing here.
Absolutely. So Vantage Bank looked at this as, when we looked at deposit tokens and stablecoins, we initially saw that, stablecoins could be a threat to community banks, because deposits leaving limits our ability to do what we do, lend out money and be active in our community. And so we said, let's get involved. Let's learn some more. And so we've been doing these pilots, these studies, and learning more over the last several years. And so we think that community banks have to innovate, have to move forward, because this is the future of money movement. This is the future of money. Digitized, programmable money is what the world is coming to. And we have to meet that challenge as a community bank. And so we're excited about the opportunity we have in deposit tokens. The money stays at the bank. We can lower our costs. We can increase our regulatory oversight, our compliance oversight. So everything is programmable, and everything is done on a modern cloud native architecture that allows us to do really cool things with integrations into third parties like cable, providing that automated assurance, making sure that we've got that oversight and compliance capability, making sure we're doing what we're supposed to be doing. And so it really makes it much more transparent, much more of a much more efficient way of managing funds for our customers.
Well, you mentioned that you saw a while ago that stablecoins might be a threat to deposits at a bank like Vantage Bank. I think that's a very smart insight that you had a while ago. Was that from research in the market, or were your customers asking about stablecoins or asking about blockchains? How did that come about?
Well, it really was from kind of our risk assessment.
Yeah.
We looked at it as saying, where is the market moving? What are threats that we face as bankers? And so this was a threat. Money leaving the banking system and moving to these private entities that, quite frankly, don't have the same interests all the time with compliance and governance, because for them that's overhead, that has cost. Banks are trusted entities that have just instilled, we've been instilled with this oversight and compliance. That's what we do, and that's the requirements. And so we saw that as a threat, but we then looked at it as an opportunity for us to innovate. And we've got wonderful partners that we're working with. We're working with Custodia Bank. We're working with Infinite to build this platform to offer stablecoins and deposit tokens in a really compliant and regulatory friendly manner.
Yeah. And so if I was a consumer of Vantage Bank, what might be some of the things that I can do because you now have this infrastructure set up?
So when you have deposit tokens, you can create these smart contracts. These are self-executing payments or based off any kind of criteria. So we as Vantage Bank, we have a lot of customers that do cross-border business, logistics companies, for example. So we can create a smart contract, or the company, a logistics company, can create a smart contract and say, hey, once I receive the freight, maybe I release a portion of the proceeds. Maybe once it reaches a certain milestone, maybe it gets to a warehouse, or maybe it clears customs, I can automatically and dynamically release a payment. Mm-hmm. And so instead of, hitting these marks and then somebody saying, okay, well, I've got to submit an invoice, and then accounts payable receives that invoice, and the accounts payable has to issue a payment. And then, the payment may be through, a legacy rail, may take days, hours. God forbid they're mailing a check to me. Mm-hmm. And so this really empowers people to move that money faster and quicker, and really creates a much more positive experience for everybody involved. And so that's one example, but you can bring this down to construction lending. You've got an inspector who goes to a building and, hey, I've done the inspection, blah, 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 let's do this. And guess what? We can automatically release that payment, but not just release the payment to the general contractor, but maybe also automate the payments to all the subcontractors. Mm-hmm. So now I've taken work off of the GC's business to issue those payments to the subs. And now everybody's happier because they're getting paid at the end of the week, like many construction companies are hoping to do. So.
Yeah. And come to think of it, as you're talking through those examples, something that comes to mind is, with everything that's happening in AI and the potential for a lot of what have previously been salaried jobs and sort of product-based jobs disappear, and we end up with a lot more people in the services industries and the creative industries, where it might be milestone-based payments, project-based payments, or hourly payments versus a salaried payment.
Absolutely.
This might just become even more relevant.
Yeah, I mean, that's a great analogy. So the gig economy has created an environment where people are starting to become accustomed to receiving payment as soon as services are delivered. Okay. This facilitates that.
Yeah. And from the bank's point of view, I just want to touch on the cost savings. I heard you mention this before. Tell us what kind of cost savings you're seeing here.
So in our POCs that we conducted, we did one where we worked with a logistics company, and we typically, our internal costs run about $7 to do an international wire transfer. We were able to bring that down to pennies. And so it's just remarkable how much cost savings an organization can have, from $7 to just pennies. And so that can either, people may say, well, I'm giving up my margins or whatever. No, this improves your margins, and you can facilitate more payments like this faster. Yeah. And so the overhead on this is also lower because it's all digitized, and it's all based off trust. And smart contracts can self-execute, and we can do a lot of that due diligence ahead of time, so that these payments flow quicker.
That's just a ginormous saving. $7 down to pennies that will just drastically change your business model.
Absolutely, absolutely. And as we look to continue to grow this, we expect that the investments that we're making into this platform to offer this. We're looking for other banks to join a consortium with us to participate and empower their bank to do this for their customers. And so we're looking at just as little as 10% of their wire volume. If they can move that over to a tokenized deposit to execute these payments, they'll break even. They'll break even after just 10% of their client payments move over. And then from there, it's
the rest is just red profit. Yeah. Fascinating. And so how does a bank actually get started? If I'm a community bank and I'm hearing this and I'm like, that sounds like a great way to increase my margin, what do I do?
Well, I would start at the very fundamentals. I would make sure that you as a bank understand what this is. I think that for many bankers out there, they kind of lump all this together with crypto and Bitcoin, and while they use kind of the same underlying technology, blockchain, distributed ledger technology, they're not the same. And so I think there's a lot of misconceptions out there as far as the risk and the risk of losing money. That's not this at all. This is just a way of modernizing your payment rails. So I would educate myself. I would look at doing small little pilots, and I would also talk to my regulators. So when we went through this, we engaged our regulators early and often. At one point, we were meeting with them every other week as we're working through the details of this. And so I think by providing that transparency, and being proactive with regulators, they're also very receptive to this. And so I think those are important parts, and making sure your board understands what this is. Many boards may want to sit this out and say, you know what, I don't understand this, so I'm not going to pursue this. And that's the wrong strategy. So I think education at all levels around tokenized deposits and stablecoins. We just had Governor Waller gave a speech last week at the Fed conference for payments, and the Fed's looking at this. The Fed is looking to they've started their pilots and moving into tokenization, and so they've essentially given banks the green light to move forward with stuff like this. And so it's now time to innovate and to start. So I would start with pilots. I would look for consortiums like the one that we're trying to build at Vantage Bank.
And what is the value of the consortium there? Why would a bank want to join that?
Well, because it lowers your costs, obviously, and lowers the risks.
Specifically the consortium, what is that going to enable that a bank just going off and doing this on their own wouldn't?
Well, I think the consortium allows you to bring in information from partners. It allows you to understand what the true capacity of the program is. This consortium that we're building will have a platform that we can offer to consortium members to have this tokenized deposit platform. The consortium will also help with building a network where we can share these deposit tokens across banks, because that's one of the biggest risks.
So it's almost like peer-to-peer payments across banks would be instant and much lower
Absolutely.
cost.
And so I want to make sure that community banks have a seat at the table when we talk about payments in the future, because we don't want to cede that to these tech partners, tech players out there that are pulling money outside of the banking system. We want to protect consumers, and we think that the FDIC insurance, the regulatory oversight, the trust and security that banks have built over the years is still front and center. And so this consortium allows banks to participate in this. And lowers the barrier of entry, but then also helps with interoperability, because that's the one risk on the deposit token side. We don't want so many fragmented tokens out there. What this will allow us to do is create that ability to exchange these payments with each other at a much lower cost.
Got it. Okay, that makes a ton of sense. When you were starting out with all of this work, how did you at the bank think about build versus buy? I mean, you've mentioned you're working with Custodia Bank and Infinite and obviously Cable. what is your decision-making process around building versus buying?
Well, we wanted to make sure that we were partnering with experts in these fields. So we didn't think that if we were to try to build it ourselves alone, it would take too long, and for us to build up the expertise, it would be very difficult. So we partnered with Infinite on the ledger side, because we believe that the platform is strong and robust, and will help us and other banks really build a solid platform for their customers. Custodia Bank has a proven tokenization technology that is now a proven technology that we think will really modernize how banks do payments. And of course, with other partners like Cable, with others that we're integrating into the platform, we have to build that in with partners who have that expertise. We want to make sure that we have the right oversight on this product, on these services, because trust is what is the differentiator here. And so we want to make sure that we can assure the banks, the customers, our regulators, that we're doing everything we can to do this right. And so that's really the biggest takeaway is we wanted to do this right. We wanted to make sure that we're providing the best resources available so that this can be something sustainable, because this is so important for the survival and success of community banks. Being able to innovate with proven partnerships like the one that we have with Cable is really going to take us far.
Yeah, it's very interesting. My final question is, and as far as you're able to share, it sounds like you started thinking about, the risks to you as a community bank years ago, identified stablecoins, crypto as this potential threat, and started on this journey towards tokenized deposits that you're now seeing come to fruition. What is the thing that you're thinking about now that in 10 years' time might be that risk that you're now working towards?
I think that we're always thinking of what the next thing is going to be. I think that we're going to focus on tokenization over the next year or two. I think that we're also as any organization today is concerned with cybersecurity and the risks that AI brings from a cyber risk perspective. I do think our organization is not only investing in AI technology, but AI knowledge within our organization to look at how we can leverage AI further to help us with our compliance, innovation, creativity. So I think that we'll continue down that path with leveraging AI as a collaborator. Not as a replacement for employees, but as a collaborator to help us deliver products that mean something to our customers.
Yeah, awesome. Well, thank you, Jay, for joining us on Tasha's Takes, and it was wonderful to speak with you about this.
Thank you, Tasha.